Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Recursion Pharmaceuticals Inc. quarterly report. Recursion Pharmaceuticals Inc. offers a range of businesses and services including clinical stage biotechnology company, drug discovery, industrialization, through technological innovations development of multiple therapeutic candidates, plus REC-994 for cerebral cavernous malformation, plus REC-2282 for neurofibromatosis type 2, plus REC-4881 for familial adenomatous polyposis, and AXI-NUN or APC mutant cancers, plus REC-3964 for Clostridioides difficile infection per clinical stage product. RBM39 for charproficient ovarian cancer collaboration with various partners, plus Bayer AG, plus University of Utah Research Foundation, plus Ohio State Innovation Foundation, plus Roche and Genentech, plus Takeda Pharmaceutical Company Limited. The stock price of Recursion Pharmaceuticals, Inc., RXRX, has dropped by over 28.84% in the past year due to several key news events and ongoing financial concerns. The main contributors to this decline include weaker-than-expected CONE 2025 results and pipeline discontinuations, which led to a significant drop of 15.63%. Additionally, the company's Q3 2025 revenue miss resulted in an 8.09% decrease in shares. Ongoing financial challenges have also contributed to investor uncertainty, including substantially increased operating costs, net losses, negative EBIT margins, and concerns about pharmaceutical partnerships and clinical trial progress. Furthermore, reported insider selling of shares has added to the decline. These factors collectively have led to a significant drop in Recursion Pharmaceuticals' stock price over the past year. The primary drivers of revenue growth or decline for tech bio companies can be summarized into three main categories. Revenue growth is primarily driven by an increase in market size, adoption of AI-enabled technologies, successful completion of clinical studies, and collaboration with third parties. Additionally, proceeds from the issuance of common shares, receipt of payments from strategic partnerships, and acquired contract liabilities have contributed to revenue growth. Notably, significant collaborations, such as those with Sanofi and Merck KGaA, have also provided substantial upfront payments and potential milestone payments. On the other hand, revenue decline is primarily driven by net losses, decrease in unearned revenue, and decrease in cash and cash equivalents. Depreciation and amortization, stock-based compensation, asset impairment, lease expense, loss on disposal of a business, and net cash used in operating activities have also contributed to revenue decline. Overall, the success of tech bio companies is heavily reliant on their ability to secure significant collaborations, complete clinical studies successfully, and adopt AI-enabled technologies. The company's financial performance indicates that it is not generating positive operating cash flow. Despite a total operating cash flow figure of $16.1 million in 2025, the amount is actually negative due to significant net cash used in operating activities. This trend is consistent throughout the year, with multiple statements confirming the lack of positive operating cash flow for the 9 months ended September 30, 2025. The company's financial performance reveals a significant increase in interest expenses. For the 3 months ended September 30, 2025, interest expenses rose by $1,714, 44.8% increase, compared to the same period in 2024. This trend continued for the 9 months ended September 30, 2025, with a $5,403, 48.5% increase jump from the previous year. However, the company's debt level has shown a slight decrease. Total liabilities decreased from $413,816 to $352,578, indicating a reduction in overall debt. Additionally, long-term debt repayment increased from -$2,339 to -$6,258, suggesting that the company is actively paying down its debts. Management is outlining a strategic shift towards model validation for AI-generated results, aiming to create an integrated technology-first drug discovery platform. Key objectives include leveraging collaborations, scaling like a tech company, and improving infrastructure and data sets. The company plans to commercialize approved drug candidates, prioritize intellectual property protection, and maintain technical operations infrastructure. Additionally, management acknowledges the need for future funding to support ongoing operations and technological advancements. The company has made several significant acquisitions and divestitures in recent years. Key acquisitions include the purchase of Exscientia, an intangible asset from Helix, and a 50% stake in RE Ventures I, LLC from Relibio IPB, LLC for cash and shares. Additionally, the company issued 2.4 million shares to Relibio as part of this deal. In terms of divestitures, the company disposed of Exscientia GmbH for $4.4 million. These transactions demonstrate the company's strategic efforts to expand its portfolio through targeted acquisitions, while also optimizing its operations by divesting non-core assets. The company's financial summary reveals that it has not paid any dividends to its shareholders. Instead, it has focused on other capital management strategies, including selling shares through at-the-market offerings and redeeming exchangeable shares for Class A shares. This suggests that the company is prioritizing shareholder value through share buybacks rather than dividend payments. That concludes the financial summary for Recursion Pharmaceuticals Inc. Feel free to comment below, and I will be happy to answer them when possible.